on Cengage. Now remember, we've already done all the work. All you're doing right now is doing a plug and chug, and that you are to start at number 3. So it means you go by all of these entries, all of this stuff, and we're going to do the adjustments. But it mentions something about a spreadsheet. Now, and to prepare the unadjusted trial balance, you've already done that, but you can pull up the spreadsheet, and let me bring that into focus over here, and it shows an adjusted trial balance. Now, you've already done all of this, remember? Now, what you want to do is fill in this down here. And you can do that directly off your sheet. And there's no adjustments here, but that comes from your end of the period worksheet. That comes from what you've already done. So you have cash of $3,200, and then you had your adjustments that you could put in there that you could use as worksheet. So let's go down here, and then at the end of July, okay, you had the insurance, the supplies, the depreciation, the accrued, the rent, and you just had to plug those in because you've already done those. And that was under the adjustments accounts. So A was, let me get to it, insurance expense here of $375. Then you had prepaid insurance credit of $375. B was supplies expense of $22.75. And we had to credit the supplies. Oh my goodness, I'm sorry. That doesn't go there. And supplies, $22.75. What was C was depreciation, so you had that of $750. And accumulated depreciation of $750. Yeah, the next one was salaries expense. You already had that one. It was $175, and salaries payable of $175. And then you had rent expense of $2,400, and you had to credit the prepaid rent of $2,400. And then you had one final one. It was the unearned fees. Oh goodness, is that going to show up? Unearned, what do we do? Fees. Unearned fees gets debited for $27,500. And the unearned fees, or the fees earned, I'm going to do that one way or the other, aren't I? Get credited. Okay, you got that. Then all you had to do was come down, and now you're going to do your income statement. So, well, I guess this is going to be fees earned of, what was our adjustments? Let's see, if I go over there, it's $44,350. And expenses of, well, there's only one expense there, and that's salaries. So that expense was $175. Again, there's only one expense there, rent expense of $2,400. If we go here, there's only one expense right here, and that is $22.75. The next one, there's an expense, depreciation, obviously, is an expense, and I think that was for $750. Let's look at this again. Is there, what do we got? I need insurance expense of $375 and one more expense, and there's only one left, right? And that is $1,400. And that comes directly from the worksheet you did, if you did it in class. My total expenses were $10,875. And that makes this net income, this is coming right off your worksheet, $33,475. Okay, you got that. Now you know how to do a statement of owner's equity. So the first thing you think, and I'm not happy the way they did this is to be 0. Then this is to be investments during the month, and that was $45,000. Now what do I have to add to that? We've always add the income first, right, of $33,475. And that must total, I don't know what that totals. 5, 7, 4, 8, 7. Oh, that was really backwards, wasn't it? So it totals 7,8,475. Less, right? Withdrawals of, where is that? 12,500. And that gives us the increase in owner's equity of, oh, my brain's starting to hurt. No wonder yours hurt. That amount should be 6,900. Where the heck is it? Hold on. There we go. You started with 0. You added 4,500 or 45,000. You added income of 33,475. That gave you a total additions of $78,475. You subtract the withdrawals of 12,500. It gives you an increase of $65,975. You started with 0. You add this, so our ending capital on July 31st is $65,975. So you've got that. Now, this balance sheet is going to, first of all, you need to transfer down. Remember doing this? Remember, you have to transfer down the, whoops, I'm in the wrong place, capital accounts. It gets added as you did this. I think this is a step we forgot that we used to do, or that we did. So that gets down to there, 6,5,975. Now, we can do our assets off of the trial balance you did. So you have 32,450. You have, what's our next one? Accounts receivable of 16,450. We have office, or we have supplies next of 15,25. We have evidently prepaid rent next of 2,400. And finally, we have current assets. What do you got here that's an asset? Must be prepaid insurance, possibly? Yeah, prepaid insurance is our next one on the list, and that is for $41,250. Then we hop down, and we're going to look at property, plant, and equipment. And these are called long-term or non-current assets. And that's going to be office equipment for $14,000. And this is going to be less the accumulated depreciation, which is $750. which gives you a total here of, if you net those two, 13,250. And then this adds up, whatever that adds up to be. Let's see. 32,450 plus 16,450 plus 15,250 plus 2,400 plus 41,250. It says 56,950. And if I add these two together, let's see how close we're coming. 56,950. This should be 13,250, and that is 70,200. So you had all your numbers on your worksheet. You just had to plug and chug them and think about it a little bit. Now we need to do the current liabilities. And if I look at my worksheet again, my current liabilities are accounts payable. It's the first one. 1,300. I bet I have salaries payable as the next one, and that was 175. Accounts, salaries payable, yeah, 175. And it looks like we have one more. It must be unearned fees, and we adjusted that down to 1,300. No, wait a minute, let's find it. 2,750. And if we add those up, that gives us our total liabilities of 4,225. Added to this should give us 70,200. And that gives you your balance sheet. Then we looked at the closings. And all you had to do was plug in your plug and chug here. What is this? So this is going to be July 31st. We're going to look at this, and the first one was fees earned was debited for 44,350. The income summary was credited for 44,350. The next one was the income summary, and that was for debited for 10,875. And remember, I said you had to do each one of these separately. So here's an expense, and that was for salaries, and that was a credit for 3,675. The next expense that shows up here is rent expense, and that needs to be credited for 2,400. The next one we've got as an expense is supplies expense, and that one was for 2,275. I'm going right off your worksheet. And depreciation was 750. Insurance was, what was insurance? 375. Final one, insurance was miscellaneous, yes? For 1,400. Those should add up to 10,875. So these two are done. Now, both of these are July 31st. July 31st. What's the next thing I close? The income summary. And that income summary has 33,475. I put a bound determined to put that in there. 44,375. Debit. We're going to empty it out, and it goes to capital of 44,375. So you got that one done. Income summary is emptied. This needs to be the 31st. This needs to be the 31st. Now we're going to debit the capital account for that 12,500 draw and empty out the draw. And let's bring that up. And the drawing, 5,500. Make that go away. Boom, you're done. Then all you do is pull that post-closing trial balance, and the numbers actually, if you look at it, are the balance sheet's numbers up here, basically. So you just go down the row with cash, debit balance 32,450. Next one is supplies. What do they got? Oh, accounts receivable, 16,450. Again, this is right off your sheet. You're looking at supplies of 3,800. That's not right. Wrong number. Sorry, guys. Supplies of 1525. Next thing is prepaid rent of 2,400. This is right off your balance sheet. And prepaid insurance. What's my prepaid? 4125. And let's see if are we getting there? I think our next one is equipment, 14,000. Then you should have accumulated depreciation of 750. And then you should have accounts payable. Over here is going to be a credit of 1,300. What else do you have? Accounts payable. Then you have unearned fees. Accounts receivable, office equipment, miscellaneous. Oh, salaries payable. I forgot that one. Salaries payable of, that's down at the bottom. Where the heck did that go? $175. And unearned fees right here of $22.75, $27.50. And I bet this is going to be a capital account of 65975. And if you add these up, that should come up to 70,950. 70,950. And that is how you transfer that. Now you could have gone and used this sheet and carried through, but that's basically what we did here. So if you filled this out, that's just very good practice for you. Okay, that's it. I hope this helps.